All right, here we are with the final video of the LIFO FIFO weighted average examples doing intermittent purchases and sales. So in this one, same problem. Everything's the same except we're going to be using the weighted average method this time. And like I said, weighted average can be a little bit trickier. So I'm going to try to show you some kind of helpful hints and tips on how to get past that. The first thing is, hopefully, if you remember doing it for the purchase example that we did, a purchase sale example that we did earlier, using the weighted average method, hopefully you looked at that going, well, you know what, that's not too bad. And if you did say that, then this one's not going to be too bad either, although it has multiple sales and multiple purchases. Because what I'm going to do is I'm going to hide everything up to the first, or behind the first sale. So I'm just going to put, I'm going to hide it. Now it looks pretty much like what it was before. An intermittent purchase and sale is just a single purchase sale done multiple times. So I'm just going to make it look as close as I can to the other ones that we did. So going back to the way we were, the journal entries that we were doing, the first one doesn't change. The 115 entry for inventory and cash for 1800 is not any different. Then we get to the April 1st sale where we sell 175. So I'm going to go ahead and put my accounts down. So cash, sales, revenue, COGS, and inventory. And then I'm going to start doing the calculations for them. As you can imagine, hopefully you have paid attention up to this point. The cash and the sales revenue isn't going to change because nothing has changed between the three methods in terms of what we sold and how much we sold it for. The only thing that's different is the method that we use, but that's for COGS and inventory. But again, just to go through it and calculations wise, to keep up, make sure we're there. Sales revenue is 175, how many we sold, times the 25 that we sold it for each. That's going to give us 4,375. So I'm going to go ahead and put that in my journal entry again. I'm also going to put a little slash mark through the 175 because, again, we're done with that. Now I need to, from the sales purchase, from the sales perspective. But now I need to expense those 175. So that's the number I need to hit. But remember, we're using weighted average this time. So we got to look for that magic number. And remember, it's a three-step process. So the first step is to multiply everything out. So I'm going to multiply the 50 times the 10. That's going to give me 500. And the 150 times the 12, that's going to give me 1,800. That's step one. Step two is to add those two together. So if I add that up, that's going to give me 2,300. And then step three is to divide that number, that 2,300, by the total quantity we have available to sell. Well, to divide that by the total quantity, we need to add up everything that we have available to sell. So we have the 50 and the 150. We add that up. We don't have individual 50 or 150 more. We just have a total of 200 now. So if we divide the 2,300 by the 200 units we have available to sell, that's going to give us a weighted average amount of $11.50 per unit. So now we don't have $50 or 50 units at $10 and 150 units at $12. What we really have in inventory is we have 200 units at $11.50 a piece. Makes things a whole lot easier because now we know that we have to expense 175. So I'm going to take 175 out of that 200. And so 175 at 11.50, that's going to give me $2,012.50. That's my COGS now. So I don't have to break it down into its pieces. It's just they're all the same cost, 11.50. So I'm going to put that 2012.50 into my journal entries. 2012.50, 2012.50. And I'm also going to, like we've been doing, put a little slash through that 200 at the top because we don't have 200 anymore. We took 175 of those out. So I'm put a little slash mark, put 25, let myself know, hey, don't forget that. We have 25 at 11.50 still. All right, so we're done with the first cell. So now we're going to move the box up and get ready for the next one. Now, before we can do that, we need to fix something. Because remember, we still had 25 at 11.50 as the ending inventory of the last sale. And we know with ending inventories, they become beginning inventories for the next one. So I'm just going to put myself a little note that says, as of 4/1, I have a beginning inventory or ending inventory for the last sale of 25 units at $11.50 a piece. What you call it doesn't matter, but I call it beginning inventory for the next sale because I also know that with beginning inventories, I don't have to do a journal entry because I've already done the journal entry for them. So now I move to the next entries, which are the 5/1 and the 6/2 purchases. Again, those are going to look identical. Inventory cash, 3,000 and 3,600 respectively. And then we have the 7-11 sale. So I'm going to go ahead and put my journal entries the counts down: cash, sales revenue, COGS, and inventory. I'm going to go ahead and calculate my sales revenue. So it's going to be the same, 430 times the 25. That's going to give me 10,750. Put that in my journal entry: 10,750, 10,750. Put my little slash mark through the 430 because we're done with the 430 in terms of sales. Now we have to expense 430 units. We have to get rid of them. And with a new sale comes a new magic number. We have to do the same process again to find the new weighted average amount. So step one is to multiply everything out. So 25 times 1150, that's going to give me 287.50. 200 at 15, that's going to give me 3,000. 225 at 16, that's going to give me 3,600. That's step one. Step two is to add all that up. So that's going to give me a total of 6,887.50. And then step three is to divide that number by the total number we have available to sell, which is the 25, the 200, and the 225. We don't have those individually anymore because we have now a total of 450. So 450 units divided into 6887.50, and that's going to give me a weighted average cost of $15.31 per unit. So now again, we don't have 25 at 1150, we don't have 200 at 15 and 225 at 16. We have just a total of 450 at $15.31. Now that we know that, then we can expense those 430 out of that 450. So we'll take 430 out, so it'll be 430 at $15.31 per unit. Multiply that out, that's going to give me a total of $6,583.30. That is my COGS, and that is what I'm going to put in my journal entries. There you go. And then one last thing, I'm going to put that little slash mark through the 450 at the top because we don't have 450 anymore. We have the 20 that we've had on every one of them. So far, 20 still is the ending units that we have. So, all right, so now I'm ready to get into the figuring out those things that they asked us to do: COGS, gross profit, and ending inventory. And again, I'm going to start with total revenue. Total revenue doesn't change. It's still going to be $15,125 for the same reason. It's the $4,375 plus the $10,750, the two line items in our journal entries that says sales revenue. Total COGS is going to be the same thing, same way we figured out. It's not going to be the same answer because total COGS is going to be the $2,012.50 plus the $6,583.30, the two line items that says COGS in our journal entries. Add that together, that's going to be $8,595.80. Now we get to the gross profit. We know gross profit, or at least we should know gross profit, is sales revenue minus COGS. So the $15,125 minus the $8,595.80. That will give us a difference of $6,529.20. And finally, the last thing is the ending inventory. We know it's 20 because it's been 20 units every time for the ending inventory. But this time it is an ending inventory of 20 at the $15.31 we found. And that's going to give us an ending value of $306.20. And that is how you do the weighted average method using an example that has intermittent purchases and sales. So we've done a lot with the FIFO, LIFO weighted average. We've done it with just purchase, sales, and then we did intermittent. Hopefully these made sense. If you have any questions, please feel free to comment them. I'm happy to help. This is one of those things, like I said, this is typically the more challenging one. And so if you can figure out a structure or a system to put in place that's going to help you through it, it'll make it a little bit better. And this is the system that I put in place. So hopefully it helps you. So y'all have a good one.